Wall Street, the heart of global finance, a battlefield of brains, instinct, and billion-dollar decisions. But today, a new challenger enters the ring. It doesn't sleep, it doesn't fear, it doesn't guess. Meet the AI investor, and it's about to simulate $1 million strategy to take on Wall Street itself. This is AI Millionaire Sim. Let's see if the machine can outsmart the market's best. To compete with Wall Street, our AI must master 3 dimensions: quantitative analysis, charts, patterns, numbers; fundamental analysis, earnings, news, economic data; sentiment analysis, Twitter, Reddit, news cycles. We feed it 30 years of market data, over 500 company reports, global macro trends, and real-time news from CNBC, Bloomberg, even Reddit threads. It tests over 10,000 strategies before selecting its ultimate plan. A dynamic portfolio blending tech growth stocks, dividend kings, momentum trades, and risk hedges with inverse ETFs and commodities. Welcome to the crucial step of deploying the $1 million portfolio. Here, we strategically place investments to maximize returns while managing risks effectively. Let's break down the allocation of our capital, $1 million. Our objective is clear: beat the S&P 500 and outperform hedge funds. The initial portfolio is diversified as follows: 35% in AI and cloud tech, including companies like Nvidia, Microsoft, and Palantir. 25% goes into global ETFs and green energy. 20% is allocated to dividend-paying giants such as Pepsi, JP Morgan, and Johnson & Johnson. 10% is invested in commodities and gold ETF hedges. The remaining 10% is kept in liquid cash for fast trades. It's balanced, it's smart, and it adapts in real time. Now let's talk about real-time adaptation and performance. Our portfolio isn't static. It evolves with market conditions, leveraging advanced algorithms to optimize returns and mitigate risks. This dynamic approach ensures we stay ahead of the curve, capitalizing on opportunities as they arise. Unlike humans, AI doesn't hesitate. A Fed rate hike? It rotates into defensive sectors. A market crash? It triggers stop losses and buys the dip. A hype stock explodes? AI calculates risk before jumping in. It even uses natural language processing to read earnings called transcripts and CEO interviews, judging tone, language, and market confidence. This is investing at machine speed. 6 months later, the S&P 500 is up 6.3%. The top 10 hedge funds on average are up 7.1%. But the AI portfolio, it's up 12.9%. The AI outperforms. Why? Faster reaction time, emotionless decision-making, zero media bias or herd mentality, adaptive learning from every trade. It reinvests profits automatically, compounds gains, and identifies opportunities humans don't even see. But let's be clear, AI isn't magic. It can't see black swans coming. It can't perfectly predict war, pandemics, or regulation. It still relies on human-coded logic. But what it can do is execute better than 99% of retail traders. And maybe, just maybe, even Wall Street pros. Even Wall. So, can AI beat Wall Street? In this simulation, it did. But the markets are always evolving, and so is the machine. Would you trust an AI with $1 million? Comment your thoughts and don't forget to hit that subscribe button. Next time on AI Millionaire Sim, can AI turn an Etsy store into a 6-figure business? Until then, simulate, build, dominate.